Good evening, sir.
I strongly believe that you are all doing well.
Yes,
Yeah.
sir.
So as we wait for our ICAG results, we still want to kind of rekindle, or better still keep the fire burning in us. So we want to take advantage and then learn some standards that are also in IPSAS. We believe that these 3 weeks will be very fruitful. At least the standards that we have listed, we are going to deal with those standards exhaustively. We are going to exhaust everything under that standard, and that we are going to be fine. Tonight, we want to look at IAS 21, effect of changes in foreign exchange rate. Shall we pray? Heavenly Father, we thank you so much for such an opportunity to be together as a team. We pray that as we are about to learn, you grant us the spirit of wisdom and understanding, the retentive memory, so that that day we can reproduce and pass our examination in July 2025. In Jesus' name, I will pray to thank you. Amen.
Amen.
Amen. Okay, so tonight we want to look at IAS 21. We are taking it from scratch. I can see that in the public sector exams for some time now, they are so much interested in 21. That is, it's also known, it's also under IFSAS 4. IFSAS 4. Everything is the same. It's the same under IFSAS 4. What are the key issues? What are the key issues? First, we need to look at some key definitions. Some key definitions. And the key definitions, some few ones. I'm supposed to know what is a functional currency. I'm supposed to know presentation currency. You are supposed to know the spot rate, or we're using those terms. You are supposed to know the closing rate, and then let's say the opening rate. Then after that, the next thing is to know the translation or the conversion. How to convert currencies. Then after that, we now look at exchange difference, exchange differences on settlement, and then on translation of financial statements. And finally, we look at the year-end balances, exchange difference on year-end balances. Let me just say year-end balances, year-end balances, where we have monetary and then non monetary. Then after that, we pick some questions. I gave you some questions. We go through them together. Is I believe you can set the ball rolling. Can we now set the ball? Can we set the ball?
Yes, let's go.
Yes, sir.
Okay.
Let's go.
Yes,
Yes.
sir.
So one will ask that
Let's go.
what at all is a functional currency? Functional currency. If I'm moving fast, you just draw my attention. Functional currency. Functional currency. This is the currency used in recording the day-to-day activities of the entity. Currency used in recording the books of accounts, in recording the books of what? The books of accounts. In fact, functional currency is determined by two or more factors. That is, an entity does not have a choice as to which currency becomes the functional currency. It is some factors that come together to determine the functional currency. So, functional currency is determined by
Recording in
two or more factors. That's the functional currency. Then number three, we are saying that these factors may change. So the functional currency can only change when these underlying factors or changes. So functional currency can only change when the underlying factors changes. Some will say that it's also the local currency. But it is not always true. They say it's always the local currency because most often I know you see the local currency prevailing. But you can still be in Ghana and dollar will be your functional currency, depending on the currency that rules the respective factors. So I don't buy to that definition. That functional currency is also not the local currency. No. Oh. Functional currency is determined by factors. So the currency that will win among the factors becomes the functional currency.
Yo.
Okay.
Yo,
So
Papa.
this one will lead us to the factors that determine the functional currency of an entity, so that after that it will be easy for us to explain whether indeed the local currency is a functional currency. So factors that determines the functional currency of an entity. Number one, sales price. So we are talking of the currency that influences the sale price of what? Of an entity's product. That is the sales price. Price of the product is in which currency? So we are asking. We are talking of source of finance. Whenever the entity wants to raise some source of finance, it is raised in which currency? We want to know. Retained earnings or retained profits. The retained earnings or the retained profit that is converted into cash, it is kept in which currency? Then factors of production. So we are talking of the currency that influences the payment of labor, material, and other factors of what? Production. Then the last one there, always the local currency will reign. That is the currency of that jurisdiction whose rules and regulations affect your demand and supply. So the currency, let me say your jurisdiction, the jurisdiction whose rules and regulations affect your demand and supply. So we ask the question, sales price is in which currency? Assuming this one is in dollars, this one is in dollars, this one is in cedis, this one is in cedis, this one is in dollars. Then we say that the dollar is your functional currency. Did you get it? But others say that the functional currency is the same as the local currency because if you are in Ghana, the laws of the country may force you to price the product in the local currency. Is that not it? Friends, is that not it? So that Ghana cedis will prevail here. That is, most of your product will be priced in Ghana cedis unless you are selling to a foreigner or you are exporting. Then the source of finance, you are likely to use cedis. Retained earnings is likely to be cedis. Now, if you want to even open dollar account, it's not a joke. Then factors of production, you are likely to pay in cedis. Then this one too is already in cedis. So that is why others believe that it's a local currency, but it is not always true. It can be any currency. We are just talking of the currency that will prevail among these factors. So I don't like that statement in books. Did you get it? Practically, that statement will not always make sense. Please, have I explained functional currency and the factors that determine functional currency?
Yes, sir.
Uh-huh. Bernard, your hand is up.
Yeah, sir. Sir, please, my question is, recently, in news, I learned that most of the IPPs, which are the independent power producers for electricity, they were paid in dollars. And I want to find out, with regards to the functional currency, those IPPs, can we say that their functional currency is in dollars?
No, you cannot say that until you use these factors. Did you get it? You ask a question. How did they
Yes,
price
sir.
their product? Maybe dollars. Whenever they want to raise finance, is it in dollars? Their retained earnings, is it kept in dollar account or CD account? How do they pay their labor, material, and other factors of production? Then for the jurisdiction, always Ghana cedi will prevail there. Did you get it? You cannot sit anywhere and
Okay,
determine
sir.
the functional currency of an entity. No. You have to find or determine the functional currency using the currency that will prevail among these factors. Is that clear?
Yes, sir. Yes, sir.
Okay.
So basically mean all these factors must prevail before a currency can be
the
determined
currency
as
that
a
will
currency.
prevail, that is, there are 5. So if one currency is prevailing in 3, it means that that currency has won as a functional currency. Assuming this is Ghana cedis, this is dollars, this is dollars. Okay, let me see. This is let's say pound sterling, the pounds, and then this is CFA, and then this is euro, and then let's say this is Ghana cedis. Let's say this one too is Ghana cedis. Because the Ghana cedis, there are 2. Ghana cedis will prevail. Others are 111. Did you get it? Did you
Okay.
get it?
Yes, sir.
So it is not by choice. It is determined, functional currency is determined by 2 or more factors. So you cannot also change it until these factors they change. Did you get it? Okay.
Yes, sir.
Now, the next definition we need to understand is the presentation currency. The presentation currency. Presentation currency. Now, presentation currency is the currency used in presenting the financial statements. I said presentation currency is what? The currency used in presenting the financial statements. Currency used in presenting the financial statements. 2, it is determined, it is not determined by any factor. It is determined by the entity itself. So it is by choice. Presentation currency is by what? Is by choice. Because it's by choice, the entity can choose to change it at any time. But the reason for the change must be what? Disclosed. The presentation currency can be changed. Can be changed at any time. But the reason for the change must be what? Must be disclosed. Now, where the functional currency and the presentation currency, they are not the same, then the financial statement must be translated from the functional currency to the presentation currency. In that case, any exchange gain or loss is shown under other comprehensive income. It's not a real gain. When you make a gain or loss on translation of financial statement, does it affect the pocket? No. So that one is shown under other comprehensive income. Other comprehensive income. So I'm saying that where the functional currency and presentation currency are not the same. Where they are not the same, what do we do? The functional currency, the whole financial statement will be prepared in the functional currency, and after that translated into what? The presentation currency. The financial statement is prepared. Let me use the word, it's initially prepared using the functional currency. The financial statement is then,
Sir,
yes,
that I thought that initially the financial statement is prepared using the presentation currency and then
I said,
afterwards
I said the functional. The functional
Oh,
is
okay.
what you have used in recording the transactions in your books. So you present
Okay.
the financial statement using the functional currency. And because your presentation currency is different, after that you translate from the functional to the presentation before it can be available to the
Okay.
public.
Okay.
The financial statement is then translated into the presentation currency. Any exchange difference on translation is shown under other comprehensive income. It is not an item that affects the pocket, so it cannot affect profit or loss. You show it as what? As other comprehensive what? Income. Other comprehensive income. So if we have even covered the treatment of that. Okay. Now let me just, by word of mouth, explain the closing and the opening and the spot. The spot rate is the exchange rate at the date of the transaction. Is that clear? Hello? When we say the
Yes, sir, come
spot
again.
rate,
Hello.
if you enter into a transaction, like you buy assets today, the exchange rate at the time of what? That transaction is what you call a spot rate. Is that clear? Please, is
Yes,
that
sir.
clear? Then
Yes, sir.
the closing rate is the exchange rate at the end of the year. The exchange rate at the end of the year is the closing rate. Then the opening rate is the exchange rate at the beginning of the year. Please, I believe these ones, we don't need to write them. Is that not it?
We are writing them also.
I mean, I don't have to write them.
Okay.
Please,
Why?
come again
Because
with the sports.
it explains itself. Opening rate, exchange rate at the opening, that is at the beginning of the year. Closing rate, the exchange rate at the close of the year, at the end of the year. Then the spot rate, the rate at that particular spot, the rate at the date of that transaction. Is that clear?
Yes, sir.
Okay. If that is clear, then let's look at how to convert currencies. From a higher currency to a lower currency, what do you do? From a lower currency to a higher currency, what do you do? I'm just going to use a simple approach, and that will be all. We are going to use an approach from class 4 or class 5 or class 3, depending on the school you are attending. So I'm a teacher, so I don't have dollars. I would have shown you some dollars. You will see this. I was having some 26, but don't cry. Teacher for don't say this. We want to translate or convert. Okay. Conversion of currencies. You see, the exchange rate, we have two ways of quoting the exchange rate. We have the direct quotation. We have the direct quotation. And we have the indirect quotation. We have the direct quotation. Then we have the indirect quotation. The class 3 or class 4 approach does not care whether it is direct quotation or indirect quotation. It will always give you the correct answer. So, our teachers, what they taught us in class 3, class 4, is very powerful. They knew that we're going to use it under IAS or 21. You understand? That's why they taught us. So, if you didn't attend class 3, class 4, then tonight you are in trouble. You are just in serious trouble. Okay, so let's see. Let's see direct quotation. So direct quotation here, the higher currency is always equal to 1. So one example, $1 is equal to now it's equal to what? About 16. He had the transaction to the infidelity deducted 16.67 per dollar. Can you imagine this evening? When I was paying for the Zoom, and there is a dollar in the code you say.
It's
No.
16 cities.
It's what?
16 cities.
16.
Yes, sir.
Oh, like seriously?
Yes, sir.
How can teachers open dollar? How can teachers open dollar account with this? Our CD account is dry. Okay, so 16 cities. So this one we call it direct quotation. Then we have the indirect quotation. That one, the lower currency is equal to 1. So you see that the higher currency will always be in decimals. Did you get it? So example, 1 CD is equal to, please divide 1 by 16. How much do you get? 1 over 16 will give you how much?
0.0625.
0.0625.
Yes, sir.
So 1 CD is equal to $0.0625. So this is indirect quotation. Whether direct or indirect, you just don't get confused. So let's assume that you've quoted $1 to 16 or this to this. You have $4,200. You want to convert. Just go and use your if more, let's divide, or use what they call cross multiplication. Hello, do you remember?
Yes,
Do you
sir.
remember?
Yes,
$1
sir.
is equal to what? 16 cities.
16 cities.
So $4,200 will be more. Is that not it?
Yes, sir.
If more, then the lessest you divide. Is that not it? So
Yes, sir.
4,200 over $1 times what? 16. Did you get it? It's $1 so the dollar will cancel itself. So the answer will be in cities. So it means that in other words, we multiply. I use the class 4 approach. Others too, they will write $1 is equal to 16 and $4,200 is equal to X. Find X. So they will say 1 times X. X is equal to 16 times 4,200. Did you get it?
Yes, sir.
How much are you going to get?
57,200.
57,200.
6.
6.
7.
Okay. Let you then direct approach to translate the same 4,200. So we are saying that 1 cedi is equal to $0.0625. Then what will be X, which has $4,200? Let cross multiply. It will be 1 times 4,200, which is 4,200, is equal to 0.0625x. True or false? True or false?
True.
True. So x is equal to 4,200 divided by 0.0625. How much are you getting?
67,200.
67,200. So whether direct quotation, indirect quotation, we were taught in class 4 or quarter class. Which class were you taught this? It's not class 4. Class 4, class 5, depending on the school you attended.
Pastor Robert,
Yes.
the 1 cedi we multiply by the 4,200 in the second scenario. I'm finding it difficult to follow because the 4,200 is dollars. How can you multiply by the 1 cedi?
Oh, it's like this. It's like this. You mean in the second scenario?
Yes.
So it's like this. So let's do it together. So we do cross multiplication. Is that not it?
Mm-hmm.
So when you do cross multiplication, do you agree that you are going to have 1 cedi times $4,200? Do you agree? Do you agree?
Okay.
It's
Yes.
equal
Are they
to,
commutative? Okay.
you know what?
Yes. Okay. That's fine.
The dollar will cancel itself. I wanted to show you how the dollar will cancel itself.
I've seen that, which means
You
that
seen it?
it will be different. You
Yes.
cannot
Well,
get
when you divide by
the figure.
0.0625, that one too is in dollars. So the dollars will
Okay.
cancel. Then
Well,
the X, which is in cities, will prevail.
well noted.
Okay. So you see, this side there, if you get it wrong, everything will be wrong. If you are supposed to divide and you multiply, or you are supposed to multiply and divide, with theater. So understand, I don't want to approach you. I'll tell you that higher to lower, multiply, lower to higher, divide. Then when it is in that quotation, you have to now do it other way around. That is formula work. Always use this class 4 approach and you always be safe. Have you cross multiplication? Everyone understands. Is that not it?
Yes, sir.
Yes, please.
Someone was trying to call me.
Yes, Robert.
Yes, sir.
I just realized that it looks like the indirect quotation is like an inverse of the direct quotation.
Of course.
Such that $1 equals 16 cedis is the same as 1 cedi equals 16 raised to the power minus 1.
Of
Or 1
course.
over 60. Is that correct?
Of course.
Okay.
1/16. So that's correct. Okay. Do you all understand how to convert? Hello, if you have any exchange rate and then an amount, can you convert?
Yes, we can.
Okay.
Yes, sir.
Yes.
The topic is a very short topic, but they have been using to the STEP students. Sometimes they'll give you PPU question and it will be part just to disturb you. Tonight, we want to clear that. And I'm doing it slowly, so that you can enjoy. The one writing on my board, famous study. So now, let's look at how to deal with exchange difference. The exchange difference on translation there, we've learned that it is shown on the word OCI. Let's look at exchange difference on settlement. Then we end with year-end balances. Then we are done with the standard. Then we solve our questions. Hey, more one seven.
Sir Robert, please.
We are here.
So exchange difference on settlements. I want you to put behind your exam results, your awaiting exam results, and let them focus. Oh, yeah, means it. This time I didn't go for marking. They started marking today. By Saturday, we'll finish. By Sunday, Monday, quarter. By Tuesday morning, your results will be ready.
But why didn't you go this time?
Is that what?
Why didn't you go this year?
Oh no, I'm doing something. I was engaged. Me when I go, it's not good though. I mark with iron hands. And I'm happy if I don't go.
So I'm not sure.
Oh no, be sure.
This time I'll pass.
Ask
Once you
everyone.
didn't go, I'll pass.
I believe that to whom match is given, to whom match is given, match is what expected. So I mark according to the way I teach. I think we have given the students so much. How can the student write this? How can the student write this? How can the student write this? Let me say, meet it, no. I say me say I'm here with you. Exchange difference on settlement. Exchange difference on settlement is treated in the profit or loss account. Is treated in the profit or loss account. Here, your double entry must work. Otherwise, if it's a gain, you will end up saying that it's a loss. So in the profit or loss account, in the P&L account, if you find the exchange difference at the debit side, then it is an exchange loss. For debit is for expense, right? If you see that the credit side, then you have an exchange what? Exchange gain. Hello?
Hi.
Okay.
I see.
So Let me use Onetouch as an example. I have a student in Liberia. He paid the fees and the intervention with all the charges. Let's assume that we are assuming. He paid 120 cedis. Then, let's assume that he didn't pay 120. Let's even assume that I gave it to him on credit for $120,000. They spend dollars. So at the time that the exchange rate was $1 to 15 cedis. Today, the person sent me my $120. Have I made a gain or a loss?
Loss.
Gain.
Loss and money now.
You've made a gain.
Good.
Onetouch gave a tuition on credit to a Liberian
You've made a
student for
gain of $1
$120. The rate was 1 cedi 15 cedis, $1 to 15 cedis. Right now, the rate is $1 to what? To 16. Is Onetouch gaining or Onetouch is losing? Onetouch is gaining. Onetouch has an exchange gain. But how will you know? How will you know? So in this transaction, what I will do is that I will go on the initial credit that I give. I'll go and debit my receivables with 120 and 15. The assumption is that I've sat down to do the $1 is equal to 15. So $120 will be what? X. I've done the cross multiplication and known that, okay, X will be equal to 120 times 15. That's why I've multiplied by 120 times what? 15. Did you get it?
Yes, sir.
What I mean that
Yes, sir.
before you write 120 times 15, if you are not sure of it, you have to go and do the class 4, class 3 approach somewhere before you know that, okay, we are multiplying or we are dividing. So that will give us how much? 120 times 15 give us how much?
1,800.
1,800. Then you credit your revenue with 1,800. Now, the receivables have been settled, right? So the whole receivables is no more, is that not it? So you credit the receivables of 1,008, it has been paid. So you have received money. So which account do we debit? Cash, no be so.
That's your bank.
So 120 times what? 16. I'll give us how much?
1920.
1920.
920.
30.
20.
20. Okay. So the difference of 120 here, you can see that it will go to the credit side, right? So once the difference goes to the credit side of the P&L, then we say it's an exchange what?
Yes, please.
Exchange gain.
Gain.
Did you get it?
Yes, please.
If your double entry is correct, you always get it right. You always get it right. So here the double entry is very, very, very what? Important. So when it comes to settlement, you just have to pick the respective what date. Then you look at the settlement. So let's now look at the year-end balance, the issues there. And after that, we go and pick The question they brought in March 2025, just this that. The question they brought to the FRP. Let's look at the exchange difference there. Then the previous one they said they brought, and then some other ones from ACC, Chartered Diploma in IFRS. We'll go through them, and I believe that you'll be fine. Can we look at year-end balance? Okay. Do you need another example on the settlement?
Yes, please.
Yes, please.
Another
Yes, sir.
example.
Yes,
Okay.
please.
So
Same question.
we have PhD student 2 years. So the government of Ghana took a loan from World Bank for, let's say, $1.2 million. And at that time, let's say it was on 1st April 2024. At that time, the exchange rate was, let's say, one cedi, $1. $1 is equal to, let's say, 14 cedis. Then, government of Ghana have decided to pay the loan today of $1.2 million. Today. What is today's date? Okay, so let's not use today. Let's say somewhere 31st October 2024, they paid all. Now, is it a gain or a loss? Will government make a gain or a loss?
A loss.
A loss. Let's see if indeed it's a loss. So, on 1st April 2024, when the loan was taken, we debit our cash or bank with a loan amount of 1.2 million times 14 cedis. Is that not it? How much are you going to get?
16.8 million.
16.8 million. Then we credit our loan, right?
Yes.
16.8 million. But now the loan has been what? Repaid in full. So the loan amount will go. Is that not it?
Yes.
So 31st October. So we debit the loan amount of 16.8 million.
8.
Then when we were paying the cash, at that time, the rate was what? Let's say now, today, let's say the rate was 15.25. So times 15.25. So how much did we pay in cedis for the same 1.2 million?
18.3 million.
18 point what?
0.3.
18.3 million. So the difference, you see that it will be at the debit side, P&L, right?
Yes, sir.
So I said it's at the debit side, and it's an exchange what? Loss.
Loss.
So if your double entry is not correct, you may struggle here.
1.5 million.
1.5. Is that clear? Did you people understand? Do you all understand now?
Yes, sir.
Yes, sir.
Okay. So we can now pick the year-end balance and then pick the past persons and so is that not it? Jude, Prince, Edu, Fodio, is your hand is up.
Okay, sir. Sir, please, what if there is a situation whereby the payment is made in installments?
What if the payment is made on installments?
Yes, please.
Yeah, so that one you have issue with the Asian defense on settlement and then the year-end balance. We'll look at that scenario.
Okay.
Now I'm now going to do the year-end balance. That's why I've not picked something like that.
Okay.
Is any other question? And then you're going to slow.
No question, let's move on.
Now let's look at year-end balance. Permission to draw. Year-end balances. Year-end balances. So the year-end balance will depend whether it is monetary or non-monetary. As I whether it is what monetary items,
non-monetary,
or non-monetary items. Madam Florence Wahima.
Sir, please, we only do the exchange differences on the settlement. What about the translation of the difference?
Is that what about what?
We only do the exchange differences on the settlement. And I want to ask about the translation part.
About the translation price.
Translation of the financial statements. I think that's what you mean.
I've already looked at that. That's why I skipped here. We said when you translate the financial statement, any exchange gain or loss will go through the OCI.
Oh, okay, I've seen it. Thank you.
And that one, unless we have financial statement that we want to translate before you see it. Now, year-end balance. All the financial position items are classified into two: monetary and what? Non-monetary items. When we say monetary items, they are items. They are items that will be settled or received in a foreign currency. In a foreign currency at a determinable future date. Hello? Hello?
Yes, sir.
So if you take a loan, if you have a loan which is one is in Ghana cedis, one is in dollars, the one that you are going to settle in dollars, the one that will be settled in dollars, that one is a monetary item. They are all monetary items. And the one that's already in Ghana cedis, you have nothing to do with it again. The one that is in dollars, that's what we are interested here, and IAS 21. So, loan. If it's a loan investment that you have made or loan that you have taken, it's part. If you buy equity shares, and if you sell, you get a foreign currency. It's part. Hello. Yeah.
Please, is the class still ongoing?
All right, let's continue. So I'm saying that if you have a loan on a financial statement, that will be settled in a foreign currency. It's a monetary item. Equity shares, if it will be settled in a foreign currency, it's a monetary item. If you have cash, that is any foreign currency reserve. If you have any cash that you have kept in foreign currency, it's a monetary item. If you have any receivables and it will be settled in a foreign currency, it's a monetary item. If you have any creditors and it will be settled in a foreign currency, it's a monetary item. So any item that you expect to either pay money or receive money, but the transaction will be in a foreign currency, we are saying that it is a monetary item that must be translated at the end of the year. So number 2 is that all monetary items are translated to calculate the exchange odds, the exchange difference. If you have a monetary asset, so let me draw it in the form of a table so that it will be simple. If you have, okay, let me write it this way. If you have a monetary asset and it's increasing, that is the translated value is more than the current amount, then it's a gain, right? If you have a monetary asset and it's decreasing, it's a loss. Is that not it? Hello? You have sold something on credit, so you have receivables. By the time that you sold it, if the person had paid, you would have gotten in Ghana cedis 10,000 cedis. But because the person had delayed payment, should the person pay at the end of the year, you would get 8,500 cedis because of the movement in the exchange rate. You have a loss. Is that not it?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Then if you have a monetary liability, if it increases, you rather have a loss. If it decreases, you have what? You have a gain. You are owing somebody that you are supposed to pay in dollars. Whenever the dollar rate, whenever, let's say, the CD depreciates, you'll be crying because you have to take more CDs to go and pay the person. You'll be losing, is that not it? Whenever
Yes.
the CD appreciates against the dollar, you'll be happy because you will need small amount of CDs to pay for the same dollars. So the underlying issue here is that you must calculate exchange difference on all monetary items at the end of what? The year. Did you get it? Year-end balance. What about non-monetary items? There's a hand up. David.
Sir, please, I want to ask a question. Please, I want to ask that can there be a case where maybe based on contract, the transaction was based on an agreement that maybe even though the exchange rate is maybe $1 is 16 cedis for today, even when you delay payment, you still have to make the payment at the same rate, at the same exchange rate. Could there be a case like
if you have that agreement, then it's more or less like it is as if you are paying in Ghana cedis. So that transaction will not fall under IAS 21. It's not a foreign currency transaction. The movement in the exchange rate does not affect you. IAS 21 is saying the effect of changing in foreign exchange rates. That's the title. Is that not it? So if the transaction is such a way that the movement in the exchange rate does not affect the transaction, then you have nothing to do with foreign currency transaction. Did you get it?
This yes.
It means that there's no exchange gain or loss. That's what I mean.
I get it.
Okay. So now let's look at the non-monetary items. The standard says that non-monetary items are items that are not monetary. Non-monetary items are items that are not monetary. So example is PPE. PPE, motor vehicle, land and building, investment property, etc. What is the issue? At the end of the year, non-monetary items, you are not supposed to recognize any exchange gain or loss on them. I get it. No exchange difference. No exchange difference is recognized because these are not items that you expect to pay cash or receive cash. Did you get it? So no exchange difference is recognized on non-monetary items at year end. The last issue here is that translation of the non-monetary items at the end of the year is done for the purpose of ascertaining the fair value, where the entity uses the revaluation model or the fair value model. Did you get it? You have land and building. It is situated in US. If they do revaluation, the figure they will give you will be in dollars. Is that not it?
Yes,
is that not it? So to ascertain and revalue the amount, you translate or you convert it into what? Into your functional currency. That's all. So translation is done only to ascertain the fair value or the revalued amount. There is no exchange difference on non-monetary items. Joseph, your hand is up.
Yes, thank you very much. Just in adding something to the gentleman who mentioned that a contract could be made with an exchange rate agreed already. And you said it doesn't affect because it doesn't have any effect on the exchange rate.
So let me
a
minute. Let me clear that. Understand was that he was asking a question. What if you enter into a transaction with a particular exchange rate and you are supposed to settle using the same exchange rate?
Yes.
Yes.
All right. So using the same exchange rate, let's assume that in January 2025, there was an agreement for an investor to supply goods to you in Ghana, and you were supposed to pay him in foreign currency, but at the exchange rate on that particular day, which is agreed. Now, by the time you are paying, though it is agreed that you are going to pay based on that exchange rate, but your outflow from the bank will not be on that exchange rate. The bank will use the prevailing exchange rate to pay. So it means that at the end, you'll be paying more cedis than you would have paid if you were paying cash to him, just cash to him instantly. But because you will pay into the bank, the total amount of CD value will be more than what it is agreed. I don't know if I'm making sense.
Yes.
That's what I just want to say.
Yes, so in that case, yeah, I get you. So you are making sense in practice, but theoretically, what we are trying to say is that you have sold something to me at $100 at the time that the CD was 15 CDs. So when we convert, if I should pay you now, I'm supposed to pay you 1,500. Is that not it?
Yes.
Is that not it? So if you are saying that as you still pay you at a rate of 15 CDs, then it means that I am supposed to pay you 1,500 whenever I'm paying. It's the 1,500 CDs that I will pay. So from the point of view of me, the one owing, I don't have any movement in the exchange rate. But if you look at it from the point of view of the seller, the one who has accepted that the movement should not affect the transaction, he has an exchange loss. I get it. Because you are still paying 1,500. Assuming when you exchange the 1,500 today, it's not up to the $100, then the person would have lost. Is that not it? Yes. In fact, in practice, this thing doesn't happen. The only thing that happens in practice is that they have agreed exchange rates. For example, if you go to Ghana Free Zone Authority, for instance, usually they will give those free zone enterprises, those who are supposed to pay in dollars, they will give them the specific rate that they should use instead of the prevailing rate at a particular point in time. Did you get it? So that one will still apply, the IAS 21 will still apply because there is movement in what? The exchange rate. So always be careful on whose books you are dealing with. Are you in the books of the one who is owing, or you are in the books of the one who is lending, so that you can be able to appreciate the movement? So I think it's a good contribution. Thank you.
Thank you.
Sir, please.
Let's go to Manopoku. If you have a question, you raise your hand. Yeah.
Okay. Please, can you hear me?
Yes, please.
Okay, please. My question is, you said if it is a non-monetary item, for instance, if it is a PPE, so we would only consider the exchange rates when we have to revalue the asset.
Yes, and the translation is done only to ascertain the revalued amount. No exchange gain or loss.
Okay. So what I understand what you said, but at a point you interchangeably use fair value or revaluation, and I'm always confused about these two concepts. Is fair value the same as the revalued amount? That's what I just.
Oh yes, it can be the same depending on what you are doing. You know, on a PPE, we do more of revaluation. But on the investment property, we do fair valuation. That's why I said revaluation or fair valuation. But they are all referring to market value.
Okay. And the mode of determining them, is it the same? The mode of determining the fair value is the same as the mode of determining the revalued amount?
Of course, just that the fair value is more standardized. Like some use index and those things more standardized than the revaluation. Most of them, sometimes the revaluation, you ascertain it through the experts, estimate and those things, but they are all referring to market value. So technically they are the same. Just that
Okay.
two different standards are referring to two different terms that have the same meaning.
Okay. Thank you very much.
All right. Francis Q.A. Bank.
Sir, please, humbly, I would really appreciate it if you take the last point again, or you could write it. Either you take your time to say it again, or you write it down for us. The translation of the
which last point?
Translation of the something is done to ascertain the.
No. I'm coming to write. That's the third point I was coming to write. I'll write.
Okay.
I was just trying to attend to the questions. Let's go to. I think the other person has dropped that. Okay, so let me write that off. So we are saying that translation of non-monetary item at year end is done only for the purpose of ascertaining the revalued amounts. What's the problem? So you are seeing your screen to be black or blank? But you have still joined. I'm resharing, so it's okay. Check if it has come. All right, so translation of non-monetary items at year end is done only for the purpose of ascertaining the fair value. Or revalued amounts. So assuming the entity uses the cost model, then there will be no need for any translation. No translation will be required where the entity uses the cost model. The cost model, that is where you just pay the cost of the asset and then you depreciate. No revaluation gain or loss. Okay. So you now understand your imbalance. So technically we are done. We are just supposed to go and look at how they frame some of the exam questions. Then we go through bit by bit. I believe that we'll get it. Did you get it? Honorable Jude, your hand is up.
Yes, sir. So, looking at the examples we've given for the monetary items, it means that possibly financial instruments will be part of the monetary items.
Yes, financial instruments is part because it involves whether you are paying cash or you are receiving cash.
Oh, okay. So, what about when there are issues of the OCI and those things?
OCI has done what? Do you have OCI in financial position? We are talking of non-monetary items. Non-monetary items. So we are referring to assets or liabilities that you are expecting to either receive cash or pay cash in a foreign currency. That's what we term as monetary items. All others are non-monetary.
Okay.
Okay. So can we start taking our pictures? So this one you can convert to PDF and send on the page. So you can take our pictures and after that we go through the question that I sent. It's a very
Sir,
short
please,
answer.
would you share with us?
Yes, I'm saying that they should take the PDF and then they should take the pictures and then convert to PDF and send on the page. I will share the video with you on your platform. I will share the Google Drive link.
Okay, sir. Thank you.
Please, can somebody take the pictures and convert to PDF for us on the page? I don't think my girlfriend is here. Is Adjoa here? Adjoa, my love, are you here? But someone can do for us, right?
Yes, sir.
Yeah, so I should move.
The guys who are here.
Okay. So can I move?
Yes, sir.
Can I move? Can I move, please?
Robert, please move. Move.
Please, can I move?
You can move.
Initiatives are very, very close to the heart of the president. So you heard him say that we will be bringing the details of how we intend to start the rollout of the 24-hour economy more comprehensive. We have educated the public. We have told the mind.
Okay. Can you take the last picture? All right. Can I now go ahead and insert the questions? I hope we can go ahead and insert the questions now, right?
Yes, sir.
All right.
Yes, sir.
Permission to insert.
Sir, what kind of insertion is that?
Permission granted.
They are
We are
granted.
children. We are children.
Can Daniel put off his video, please?
Daniel, you are disturbing my ladies with your video.
Yes.
Daniel, the ladies, they don't like your video. Is it readable or I should expand it small? This is it readable? It's readable.
Yes,
Okay, so
it's not
I'll
readable.
get to the top of the line. You said that one. Okay, so let's see. So someone should take the first one for us. Question 1. That is ICA May 2020 FR.
Yes, sir. Question 1.
Discuss what is meant by the concept of an entity's functional currency and how it may be determined in accordance with IAS 21. That is the effects of changes in foreign exchange rates.
So how will you answer such a question? You have to write everything that I wrote for you. You must state that in accordance. Okay, David.
Okay, so what you said today, I know the functional currency is the currency with which the entity records its day-to-day activities. That's the journals, its journals or daybooks. The currency used in preparing the daybooks. And the factors that affect them are sales price.
When you write sales price, I'll give you 0. It must be in a sentence form. That is very important. That's what I said.
The currency,
your meaning
the
of exchange rate cry, you get the full mark. Discuss what is meant by the concept of an entity's functional currency. That's the first part of the question. You tell us that the functional currency is the currency used in recording the books of account or the day-to-day transactions of the entity, full stop. Then you add the 2 issues. That the functional currency is determined by 2 or more factors. Then number 3, the functional currency cannot be changed unless the underlying factors for changes. Did you get it? These are the 3 issues that answers the first part of the question. Is that clear?
Yes, sir.
Is that clear?
Yes, sir.
Then the second part of the question, how it may be determined. Don't just write sales price. I'll give you 0. Those sales price and things, I brought it so that you can easily recall. I getting it. So sale price, I mean the currency that influences the sales price of the entity. That's how you state it. Retain earnings or retain profit. The currency that is used in keeping the retained profit of the entity. That's how you state it. The currency in which debt and equity source of funds are raised or is raised. You state it that way. Did you get it? Did you get it?
Yes, sir.
So it should be in sentence form so that the currency will show. It's very important. So we now know how to answer question 1. Is that not it?
Yes,
Let's look
sir.
at a question they brought last night. Just this exam that we are waiting for the results. March 2025. There was a question on foreign exchange transaction. That is IAS 21. FR students, let's see. I didn't change anything in the question, including the name. So read for us. The Ahiati, is it in water
Ahiati
region?
Limited
Please, is Ahiati
one of the
water or where?
Yes, it's Volta.
It means that the one who said this particular question is a Voltairean. Ahati. So let's continue.
Ahiati.
is one of the leading manufacturers of pharmaceuticals in West Africa. Ahiati has a customer in Mexico called Taco. Ahiati made a credit sale to Taco on 1st October 2024 for 100,000. Is it dollars or Mexi dollars or?
That's Mexico dollars.
It's Mexico dollars.
Oh,
Yeah.
okay. Yes, sir. Ahiati received part payment on 30th November 2024 of Mexican dollars 60,000 Mexico dollars. The following exchange rates applied during the financial year: 1st October 2024, 1 cedi is to 1.25 Mexico dollars. 30th November 2024, 1 Ghana cedi is equal to 1.20 Mexico dollars. And on the 30th of December 2024, 1 Ghana cedi is equal to 1.1 Mexico dollars. Required: prepare journal entries to show how the above transactions should be recorded in the books of Ahiati for the year ended 31st December 2024. And then B, show the financial reporting treatment of the foreign exchange gain or loss at the 31st of December 2024 for Ahiati.
Asamna that one. Four. There's a question they brought just last night. FR students, they said it's difficult. Friends, is this one difficult?
If you are not
let's see.
I think it's not that deep.
So the first thing is that they said you should show the journal entries. They just want you to show the 3 dates. Is it 3 dates or 2? So the date of the transaction when the items were sold, the date payment was made, and then the end of the year where you have a balance to pay. Did you get it?
Yes, sir.
Okay. So journal entries. Number 1. We are looking at 1st October. 1st October 2024. Is that not it?
Yes, sir.
We are in the books of who? Ahiati, right?
Yes, sir.
Okay. So Ahiati, the one who sold the goods. Hello. So
Yes,
the
sir.
functional currency of Ahiati is the Ghana cedis. Do you agree?
Yes.
They should have stated it in a question, but at least you should know. They said he has a customer in Mexico. So it's a customer that is paying the Mexican dollars.
Yes.
So if Ahiati sells goods on credit, then Ahiati will credit revenue, true or false?
True.
And then Ahiati will debit receivables, true or false?
True.
With how much? With 100,000 Mexican dollars at a rate of 1.25. Do you agree?
Yes.
So are we multiplying or we are dividing?
We are divided.
See now. Let's go and check. Let's go and check. So let's see. 1 Ghana cedi is equal to 1.25 Mexican dollars. Now we have 100,000 Mexican dollars. Okay, let's just put X. The cross multiplication is easy. So let's do cross multiplication. Are you supposed to divide or you are supposed to add? We are supposed to do what? Divide. Do you all agree?
Yes.
So because X we equal to 100,000 times 1 over 1.25. Is that not it? So we write 100,000 divided by 1.25. So that will give us how much?
80,000.
Is that bad? Because usually we would have given you a trick. The trick is that if you get an answer that is outrageous, it means that you are not doing a good thing. And you know, you use just small rate, so 1.25, the one you multiply by 100,000, the figure will not be outrageous, right? It's not that showing. So it's a journal entry. So you say that paying credit sales made to a foreign customer. A foreign customer. I believe from account 101, you know that every journal entry has a narration, right? Hello, is that not it?
It is.
Number 2, payment was made on what? On 30th November. So FR student, this is what we are using to mark your paper. To be someone say a consistent.
Oh my.
So 30th November 2024. Payment was made. How much? 60,000. Is that not it?
Yes.
So if there was no movement, we would have credited our receivables. If there was no movement, we would have credited our receivables with 60,000 divided by 1.25.
1.25, yeah.
But because of the movement, we are paying the same, we are receiving the same $60,000. But when we convert, we will not get the same amount that would have gotten at 1.25. Please get it. So let's come here.
Yeah.
You have received money, so we debit cash or bank. Is that not it?
Yeah.
60,000. This is the actual amount we received over 1.20. So we made some gains, right? How much?
500,000.
This is 500,000. And the receivables is how much? How much?
$50,000, not 500,000.
50 was 500. 50,000.
50,000.
50,000. Oh, I was surprised because the total amount by 80. Okay. Receivables.
48,000.
48,000.
So the difference is at the credit side. So is it a gain or loss? Is it a gain or loss?
Gain.
It's an exchange gain. Of how much? Of 2,000. Did you get it? Then the last treatment has to do with the fact that the customer is still owing us $40,000. Is that not it? So that 40,000 Mexican dollars at the end of the year, we have to calculate exchange gain or loss on it, as if the customer paid at the end of the year. Want to know if the customer had paid at the end of the year, what would have been the exchange gain or loss on it? Did you get it? Hey, more one answer. So exchange, but now if I for it was E. No, I can't say baby sao. But
No
Hello, Zeb.
narration.
Zeb, please, I have a question.
yeah, we need to write the narration. Sorry. Being part payment received from foreign customer. I can say that part payment from your customers, okay, or receivables. Sina, you want to ask a question? Please ask.
Yes, please. Please, where I'm confused is why we credited the receivables with 60,000 over 1.25. Why we use the 1.25 exchange rates and not the 1.2?
No. So the receivables, they are recorded at the spot rate. Is that not it? At the date of the transaction, it ends there. No gain or loss is treated anything. So it is the bank. It is the bank that will take the actual amount that you received.
Okay. All right. Thank you.
So year-end balance. Year-end balance. Why do we have to even do this year-end balance? Movement in exchange, the effect of the movement in exchange rate is a change in accounting estimate and must be applied prospectively. That is, as and when it moves, the movement as at the end of the year, the effect must be treated at the end of the year. I don't know if you get me. You are supposed to pay a remaining amount of, you are supposed to receive 40,000 Mexican dollars, right? The rate now is 1.1. You have to recognize the gain or loss on it today. Because if next year the rate moves again, then you now compare the 1.1 with that rate. As and when the rate moves at the end of the year, you must recognize the gain or loss. So let's go. So year-end balance, it has to be translated. So we find the translated value. This translated value, it's what should be reported as at what? 31st December 2024. That will be the 40,000, or you can say 100,000 minus what? 60,000, at least for 2 ticks. All over what? It was the rate at the end of the year, 1.1, right? So assuming they had settled at the end of the year, this is how much we would have gotten in Ghana cedis. How much are you getting?
Three six 3.63.
36363.
3.63.
Go to the next one number.
0.64.
5.6.
Okay. Now, the current amount here is how much you would have expected if there was no movement in the rate. So if there was no movement in the rate, you would have expected 40,000 over what? Over 1.25. True or false? True or false? True. So next year, if there's movement, we'll be comparing 1.1 and that movement. Did you get it? So the 36,364 is what we are going to recognize as receivables in our books. So carrying amount, how much?
32,000.
So now you have to think critically. This is receivables. You have an asset. Receivables and asset, is that not it? You would have gotten 32,000 if they paid on the transaction date. But at the end of the year, because of the movement in the exchange rate, if they had paid at the end of the year, you would have gotten 36,364. So are you making a gain or a loss?
Again.
Again.
So here you have to think. So here is an exchange or gain. Yeah, it's an exchange. So the exchange difference on settlement and on year-end balance, they all go to the P&L account. So how much are we getting?
4,364.
4,364. So that is that. Now, the part 2 of the question, which is for only 1 mark, you say that show the financial reporting treatment on the foreign exchange gain or loss. So we just add them together. Did you get it? 2,000 gain plus 4,364 gain. Please, did you get it? For 1 mark. So you just say that, what's the name? Ahiati Limited. Statement of comprehensive income for the year ended 31st December 2024. Most of you, when you are solving exam questions, you just write the figure without telling us whether it's on a P&L or OCI. Please be careful. So you need to write profit or loss. Then under that, you write what? So the net effect is exchange gain, right? So you have a net exchange what? Gain. If there's a loss, you deduct. You deduct and you bring the net here. So that is 2,000 plus what?
4,364.
4,364 plus 4,364. So that will give us 6,364. Friends, do you get it? So this is the B part. This is away M1. The whole of the first part is 4 marks. So we'll just count the number of things and divide. You need to divide 4, then do that, including the narration. So the third one, we need to write the narration, right? So the third one, this will be the accounting arrangement. Like because it's journal entries, we need to show the debit and the credit. Is that not it? In that case, which account are we supposed to debit? We are debiting the receivables with the exchange gain of 4,364. Then we are crediting the P&L with the exchange gain of 4,364. Well, the receivables is already at 32,000. If you deduct the one that we paid. You see that if you deduct 48,000 from the 80,000, you get 32,000, right? So you adjust it with the 4364, and that will give you the 36364. Okay. So being exchange difference on year end or balances. Okay. So that is it. Hey, F have one more one, 7 year.
Yo,
We have a call. 7
yeah,
so this one you are learning for CR, not FI again. I trust you people. I know you make us proud.
Amen.
Me see the work no. What was it? We are very fine. We are very fine. Okay. Let me go and insert the question again so that we do the other part. Okay, you've not taken picture. I mean, you already have the question, so there's no need showing the question for you to take your ticket off. I want to take the question here again.
No, please.
You have the question.
Okay, so if you have it, then let's just snap a solution like this. I've reduced the font size, so it's small, but I believe it's readable, right? With the one who said you convert to PDF for I believe you are taking the pictures. Please, I believe you are taking the pictures.
Please, he has done it. He has done it. He has sent it to the page.
Oh, no, you should be updating it. Tell him that we are not done. So as and when we finish a question, then you'll be taking it and be adding it. We want one document, IAS 21 years. All right. Let me increase it and then go and insert. So the ladies, give me another permission to insert.
Sir, please, a question.
Okay.
Please, my question is, with this standard, the way we treat the receivables, is it not going to create confusion between the customer and the company? Because assuming I want to put in a practical sense, I'm owning a company, and then at the time that I made part payment, the exchange rate had gone up. So for me, for my side, I think the amount I'm owing them, because the exchange rate has gone up, I would be able to reduce my debts by a greater margin because of the changes in exchange rates. But if the company only recognizes that change in exchange rate in their cash, but they don't recognize it in reducing the receivable, won't it cause any reconciliation problem?
No, it's not called, there will not be any problem. So what happens is that this one is international finance. Once you want to do international business, once you want to go international, then you are going to face an exchange rate exposure or exchange risk exposure. So you have to make sure you deal with it as your finance will have to deal with it as international finance people. So, for example, if you want to sell to somebody in the US, would you prefer to sell it in dollars or in cedis?
In
In
dollars.
dollars. Because you know that always our currency is depreciating against the dollar. Is that not it?
Yes.
A US company, when he wants to sell to a Ghanaian company, do you think he will be ready to sell in Ghana cedis or in dollars?
In dollars.
In dollar, why? Because he knows that our currency has been depreciating. So if he sells it to us in our currency, they will get the exchange gain or loss. They are going to get the exchange losses. So they will put that one to us. You think Amazon is not wise to say that pay dollars or pay way? When you go to UK another way, Amazon allows them to pay pounds. They pay in British pounds. Why did you? They're asking you to still pay in dollars? Because they are smart and they know that Africa can collapse their business. So you bear your own exchange loss. And when we are selling to them, we want to take advantage of our currency depreciation. So we sell it to them in dollars. So in our books, nothing will happen.
Okay.
Okay, so now let's move. Let's go back to the questions. Let me open the questions. I gave you how many questions? 4, right? So what we are doing now is IPSAS 4 and IAS 21. Everything there is the same. So public sector students, please, is the same. Financial reporting, corporate reporting, the same. So IPSAS 4 and 21 is the same. So when somebody was asking how we are going to finish everything, I was just laughing in my head. Because these two, they are the same. Okay. Let's go to question 3, which is also an ACCA financial reporting question. And then question 4 is Chartered Diploma in IFRS 2015. Those who have already qualified and they want to be expert in IFRS, that's their question. So question 3, the next thing, I would like you to check if you can calculate the exchange difference on settlement and then exchange difference on year-end balance for me. Then we'll go through together. At least then you would have given me a feedback. Please, is that clear? Please, is that clear? Please, is that clear? I'm saying that I want, is that what?
Yes, it's clear.
Yes, I want to pause the recording, then read the question and see with the understanding that you have now. Assuming this question should come to you either, will you be able to calculate the exchange difference on settlement and the exchange difference on year-end balance? That is if it's a monetary item. So let me pause the record. We are going to do all the questions, so don't worry. So let me pause.
Okay.
52,000.
500.
500.
You all got that.
I got 52,620.
Okay. What about the exchange difference on year-end balance? Was it gain or loss?
It was a loss. 152,000.
Okay. I think we can go through together now, right?
Yes, sir.
Some two didn't try at all. That one too is not good though. But if you try and get it wrong, it's for your own good. Doing nothing is never an option. Also. Can you see the question 3 fully? Or I should increase it a little?
Yes, sir. Increase it a little, please.
It's okay, we can see.
Thank you.
So now it's readable, right?
Yes, sir.
Okay. Now let's see. Question 3. So we need to pick the respective dates. Then after I will look at the year-end balance. Somebody should read for us.
Okay, question number 3. An MTT MYF has a reporting date of 31st December and the Ghana cedis as its functional currency. MYF borrows in the foreign currency of the dollar, and the loan of $340,000 was taken out on 1st January 2018. A repayment of $150,000 was made on 1st March 2018. The total amount of $340,000 was used to acquire a factory building overseas on 1st January 2018. The building was revalued to $355,000 as at 31st December 2018. Building is depreciated over 50 years. It is the policy of the entity to use revaluation model. The exchange rate were as follows. 1st January 2018, $1 is equal to 3.85.
So we
1st
know
March
those ones.
2018.
We know those ones. Okay. So let's pick the respective date and see what happens on the exchange difference issues. After we come to the PPE issue. So what's the first date?
1st January
2018. So you debit bank or cash with the $150,000 at the rate of 3.85. This is an old question. Come and see the rate today. It's not a joke, man. So we multiply, right? If you don't know why we are multiplying, you need to go and check. Is that not it?
Yes, class 1.
No, this class. Say class 4. Well, depending on the school you attended. Then we credit the loan. So 150 times 3.85.
The amount would be 340.
What?
$340,000, the loan amount.
The loan amount. I thought it's 150. Okay. So 340,000. So times 3.84 will give us how much?
$1 million.
Good. 1,309,000.
So you all got this one correct, right?
Yes.
Become. So the loan amount will be 1,309,000. The next one. What's the next
one
date?
is on the
narration.
1st March 2018.
No, this one there's no narration. No. The first one because
there's no journal.
Because they requested journal entry. That's why we're supposed to add the narration. This one, all we are doing is workings. Is that we should just describe how it should be treated in the financial statement. So what we are doing is workings. After you go to the financial statement. Did you get it?
Hello, sir.
Yes, please.
Yes.
No, sir. So provided you put narration there, would they mark you wrong?
You waste your time. Nobody will mark for you. Who mark for you? Will not give you anything. Will not give you anything. So it's waste of time.
Okay.
Where you see journal before you write narration?
Yes, please. So the next date is first what?
March.
First March, okay. That's when they made a repayment, right?
Yes, please.
So the repayment. When you repay part of your debt, which account do you credit?
Cash.
Your
Or
cash.
bank.
Your bank.
Bank.
So which account are you supposed to debit?
The loan.
The loan.
Loan account.
We paid how much?
150,000.
So you can say 150,000 over 340,000 times 1309 is the same. But let me ignore that approach. So the loan, we are saying that assuming there was no movement in the rate, would have paid the 340,000 at a rate of what? 3.85. And because of the movement, we are paying the same $340,000 at a rate of what? 4.2.
Sir, I think the loan is 150,000.
The loan is
The repayment is
150, sorry. It's part payment, right?
Yes, please.
Yes. So this one is repayment, part repayment.
Part. So that will give us how much?
You credit bank with 577,500.
577,500.
No,
please. You credit
the cash is 630,000.
And the loan?
577,500.
So we debit the P&L in the name of what? Loss, right? This is all the difference.
52,500.
52,500.
So the one who got a different answer, can we know where your problem was coming from?
Okay, so what I got this one, but I thought the final figure in the P&L. I added this one to the revaluation.
Okay.
Okay, thank you.
So let's look at the. So friends, all of you got the same answers, right? All of you got these ones right.
Yes.
Yes.
Okay. Then I think some teaching and learning has taken place. No, so.
Exactly.
Maybe so.
Number 3. Obviously, I can't send a base up. So meet me. I'll graduate. What? Right, power. What is the year-end balance? We are looking at what the year-end 31st December.
Yes.
2018. So what's the translated value of the loan? Assume we are supposed to pay the loan today. Would have paid how much?
Would have paid
the remaining amount, which is 340,000 minus the 150,000
190.
at the closing rate.
0.65.
If there was no movement, then the current amount would have been
190.
and what?
3.85.
0.85.
So the translated amount is 883,500.
800 and
83,500.
$500.
And the carrying amount is 731,500.
French.
It's 152,000.
152,000.
Is it a gain or a loss?
Loss.
It's a lot.
Amount you are owing is increasing, so it's a loss, right?
Yes, please.
Okay. So let's now go to the non-monetary item. How we
But
are
the
not going to
non-monetary,
play with any exchange gain.
there's no any exchange gain.
Yes, but we are supposed to deal with the depreciation and the revaluation gain or loss. You get it?
Yes, please.
So the cost of the PP, do you agree that they said they use the whole 340? So it means that it will be
Yes, sir.
1,309,000. Do you agree?
Yes.
Yes, sir.
You agree that the depreciation for 2018, what the useful life?
50 years.
When was that set up? Is it on the same 1st January?
Yes, sir.
Yes, please.
1,309,000. All over 50 years. So how much are we getting?
26,180.
So what do you think will be the carrying amount?
128 to 820.
Carrying amount will be the cost of 1,309,000. Then accumulated depreciation. This one did I get how much?
1.28 to 820.
Then 7. Want to get the revaluation gains or losses. So set a question if it counts it for 7 marks. So for the purpose of ascertaining the revalued amount at the end of the year, that is where we do the translation. It's 340,000. What was the revalued amount in terms of dollars?
355,000.
755,000.
355,000.
5,000.
Okay. So times the rate at the end of the year, how much?
4.65.
4.65. How much are we getting?
1,650,750.
1,650,000.
Yeah. 750. 750.
So 5. Okay. Then carrying amount.
$1.282,820. 1.1282820.
Hey.
Oh.
Yes,
Sir,
I mean the kind amount that's already on the board.
Yeah, it's on the board. Yes, that's the cost minus the accumulated.
So that will give us a revaluation
1
gain.
million.
That's taken to OCI. How much?
367 930.
367
930.
Those doing FR for the first time that you have not done PP, don't worry. When we start the full session, try and register. Once we start the full session, we'll do PP from scratch. And you understand this revaluation, why we are taking to OCI things, you understand. For now, the concentration is on IAS 21, which I think you got in the concepts. Okay, so we just paste what we have done in the financial statements. The name is what? Is it Anyati? Okay, it's MY.
No, it's MY.
MYF.
MYF.
Suite finish.
But there's no limited.
Statement of that one.
There's no limited attached.
Sina. Sina, when they all call good for good.
So over like I said, limited.
If you don't bring the limited, then it's a sole proprietor. Not the difference. 20 18, right?
18.
Is it 18?
The year 31st December 2022.
Please, Harry. So profit or loss. Yeah, along the line we were 300, but it has reduced to 194. Profit or loss. So that is depreciation. 26180. Do we have a net exchange loss or gain?
Net exchange loss.
Exchange loss.
They are all losses. So when you add, you get how much?
204,500.
204,500. Then we go to the statement of financial position. Don't go and write SOFP name so Baba or write it in full asset.
What are the comprehensive income?
Hello.
So what are the revaluation gain?
We didn't bring, there was OCI, right?
Yeah.
Yes, sir.
That's why I always want to leave space. So that's why if you don't leave space, you are in trouble. But you go be.
Where the exchange, what is it, loss of 205? I don't know where it's coming from.
We added a 52,500 plus
the
152,000.
Correct. Okay.
In fact, I should have shown workings. That's the right thing to do. Revaluation gain.
Thank you.
3679 hot.
930.
Some have left, and then they used to ABC the chance for to say, and I'm also Mubakwana. I've picked the standard strategically. In the July guidance, we are expecting more of earnings per se. That's why you still have given about 6 meetings or more, I think 7, to only earnings per se. We are going to take it from scratch. Everything about earnings per se. You'll be a master of earnings per se.
God bless you.
So the non-current
statement of
assets.
financial position as at December
31st December 20. So non-current assets, the PP, the current amount will be, I think the revalued amount was how much?
1650750.
1650750. Then, what again? And the equity, we have something to treat, right?
Yeah, revaluation.
Yeah, revaluation gain.
Revaluation reserve. How much?
367,930.
So if this question should come for 7 marks, is it that bad?
It should be more than 7 marks.
But the maximum you get is 7 marks. The truth is what I'm telling ACCA can give you 10 marks, but I see maximum 7 marks.
Before the
black man with black sense.
Black man.
Before the
Okay, so I think we need to take the picture for this one too.
Still have the loan. We have loan now.
Is somebody saying something?
Yeah, the loan.
Yes, I wanted to say that.
I didn't bring the loan amount.
Yeah.
It should be 883,500. That's the translated value.
Non-current
loan.
So that is 883 what?
883,500.
Okay. So our photographer, yeah, someone was asked me that they still wanted a question to show. So please take the question and this one together. Please, can I move? Please, can I move?
No,
Yes,
please.
sir.
Please, the question is not showing well.
Oh, it's showing. I mean, the question 3 that we just saw is showing.
Okay, okay.
But sir, we didn't take the question one. No. We didn't take pictures of the question one.
It's been done already.
Question 1 is in the notes. We didn't write. We discussed.
Yeah, we are not recording. Oh, we are recording. Okay.
I'm recording, please.
He's recording.
Please, are we taking a picture? Can I move?
Yes, please.
Okay. I come here. Are we?
Yes.
Hello.
Hello.
So can you now tell yourself that you understand IAS 21 or IFSAS 4?
Yes, sir.
Okay.
Hello, sir.
Thank God. Yes.
Yes.
Actually, we are listening.
Hello.
Yes.
But my basic accounting tells me that the financial position, the assets must be equal to liability.
No. This extract.
Yes.
So it should be add extract.
Yes, ideally when you write financial position, the extract should be in bracket, but yes, it's not something that we are interested in.
Thank you.
Okay. I believe we are fine. Let's go ahead and say the last question. This last question, you are taking it as quiz, okay? Like you are solving it as if this is the last question you need to solve to pass the exam. I can't bear 7 marks. Question winner, what will you do? What will you do? So that is question 4, the last question. It's not difficult. Just take your time, read it, and understand. So it's 8:45. Take the next 10 minutes and then see if, assuming this question came in your exam, would you have done justice to it? We just want to know. Hello.
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 So I'm pausing it for the next 10 minutes, or if you are done before the 10 minutes too, just let me know. Then we go through together.
Question, no. Question.
So this is the last question we are solving now, which means that you should be able to solve any question that you get. Will you get it?
Yes, sir.
After solving, after helping us to solve
the topics that are stubborn, like financial instrument, for instance, I'm going to solve all the 15 questions I'll give you. I'll solve all of them. And especially, I'm going to give you about almost 20. Go through, which will mean that just a question and four. Question 4 on quantity. Okay.
Uncall for
So
now,
let's see.
understand that we are in here.
That is why now I want to do some for free. Even though I've named it as free, but they like this project. But this one, I'll not go to class and go and do it again. I'll just share the video with you that you should go and watch. And what's one You are not writing the exam. Just join for free. I said, no, so won't join there. I don't know. Let's move. So somebody should read for us.
On 1st of August 2015, Onetouch Limited purchased a machine from a supplier located in a country whose local currency is the group. The agreed purchase price was 600,000 goods, payable on 31st October 2015.
So pause
The
for
asset
us.
was
So
modified
yeah, with
to
Sina Sim
Onetouch
Saya ya with Sina Sim Saya with
machine.
So from the question, you can see clearly that we purchased it from a supplier whose local currency is the growth. So we are in the books of hours, Onetouch. So it means that
Yes.
hours is the Ghana, hours is the dollars, right?
Yes.
Yes, sir.
And then the customer's one is the growth, right?
Yes.
Yes, sir.
Okay. So let's pick date by date. When you read, then you pick. So the first thing that they agreed to purchase, they paid 600 growth, right? The agreed price was 600 growth. As at 31st October
Yes.
2015. Okay, so let's move. So relax. Let's pick it. Workings. Oh no. Pause.
Okay.
As you read, you want to
Okay,
solve.
so we'll do the work.
Yeah. So relax. Let's finish the working. So 1. 31st October 2015. Hey, question where wiki though. So 31st October, but the year end is 30th September. So you think it's 12 months. It's 11 months. You see that? Did you see that the depreciation is 11 months?
1 month.
1 month.
1 month.
One month.
Okay. The depreciation is 1 month.
Yes, sir.
Okay. You
On
let's
use
read.
on first
When you read,
September.
you understand. You let
First
continue.
August was
You let
No,
purchased
continue.
in the
Let
it will
continue.
be
Just
2 months.
relax.
Depreciation will be 2 months.
2
Chasu.
months.
Oh, chasu. Hey, assume see Okay. So now let's look at the cost. The cost is 600. Is that not it? So 600 to dollars. So we have to divide, right? Right?
Yes, sir.
So 600,000 over 2.5 give us how much?
240,000.
40,000.
240,000. Okay. So this is the purchase cost. Let's keep reading. It was on credit?
Yes, sir.
Yes.
Okay, payable on 31st October 2015. That is after the year end. Oh, okay, that's what I saw that I thought. Okay, so we debit the PP, then we credit what? The payable with 240,000. Please let's continue. Let's continue reading. Let's continue.
The asset was modified to suit Onetouch Limited purpose at a cost of $30,000 during August 15.
You support. So purchase cost is how much?
I want to find out. Hello.
Yes, sir.
Why are we using 31st October 2015 when the machine was purchased in August?
That's why I'm asking whether it was acquired on 31st October or I saw 31st October somewhere. If I'm not writing the right thing, just let me know.
No, yeah.
So it's 1st August, right? It was a payment that they said 31st October.
Yes.
Yes, sir.
Uh-huh.
Okay. So purchase cost is 240,000. Then they said modification, right?
Yes, sir.
So the modification cost will be added to the cost of the asset, right?
Yes.
Yes, sir.
This is in dollars. So the
70,000.
total cost will now be 200 and what?
70,000.
Let's continue.
Is that?
I said let's continue. I said let's continue.
Okay.
September 2015.
The asset was modified to suit one type purpose at a cost of 30,000 during August 2015 and brought to use on 1st September 2015.
September 2015.
So technically, the asset was ready for use on 1st September 2015. Do you agree?
Yes, sir.
Yeah.
But I assume that the whole of August, the modification was taking place. So we're not told when it was ready for use. But it is clear from the way they stated it in the question that 1st September, that was when the modification was done. So we use the 1st September as the date it was ready for use.
1st September 2015.
1st September 2015, yes.
Yes.
Did you
The
get
asset
it?
was put in use.
So the emphasis I'm trying to make here is that we are not commencing depreciation because the asset was put to use on 1st September. We are commencing depreciation because the asset was ready for use on 1st September. That was not stated, but intrinsically you should know. They said the month of August was used for modification. Is that not it?
Yes.
When they say proposes, is that a one-time proposed at a cost of 30,000 during August? It means the whole month of August was used for the modification.
Sir,
Right?
it was even stated. It was even stated.
It's brought into use on 1st September.
Yes, and I'm saying that the date at which the asset is brought to use is irrelevant. When it comes to depreciation, we don't care about that date.
Okay.
What we care is the date at which it was ready for use. We don't care when we start using the asset. Depreciation commences as soon as the asset is available for use. So I'm saying that it was available for use on 1st September. Why? Because the whole of August, they were doing modification. Even though the date at which it was available for you was not stated. Intrinsically, you should know that it is 1st September.
No, but it is even stated that brought into use on 1st September.
See, now I'm saying that brought to use is different from ready for use. Do you understand?
Okay. Okay.
Yes, an asset can be ready for use. An entity may choose not to be using it. They may be doing other things like staff training and things before they use that. So once it's ready for use, you commence depreciation. Do you get it?
Okay.
So in this question, we don't know when it was ready for use. But intrinsically, because they bought it on 1st August and the whole of August they did modification, then ideally it was at the end of August it became available for use. Did you get it?
Okay.
Okay. So let me write it just for your revision's sake. Ready for use is assumed to be 1st of September 2015. We don't care when it is put to use. It's very important you take note. Okay. The directors of Onetouch estimated that the useful economic life of the machine from the date of first use was 5 years. So meaning from the 1st September, it's 5 years. Relevant exchange rates were as follows. So they are there. So let's deal with the assets, then we're going to deal with the monetary asset issues, right? Let's deal with the non-monetary. So how much will be the depreciation?
4,500.
Depreciation for 2015 with 270,000 over how many years?
5 years.
Over 5 years.
Times what?
1/12.
1/12.
1/12. And that's how much?
4,500.
4,500.
4,500. Okay. Now I think we can even get the kind amount straight away, right?
Robert, it's dollars, not cedi.
It's dollars, sorry. I trust you didn't say actually. You teacher for the in the dollars. Kind of. We don't even have dollar account. If we have opened one, then we have opened it by faith.
Amen.
Hey, so what about the Liberian instruments?
Oh, so the open church room. So let's see. Somebody did 150 years ago. Our kind of simple. So 270,000 minus what? Minus 45,000. So that will give us how much?
It's 4,500.
It's 4,500, not 45,000.
One tell me why.
265,500.
265.
265,500.
Okay, shall we? Shall we?
Yes, we shall.
Okay. So we now go to the payable side.
Don't call it.
You are disturbing. Why?
Hey, you tell me why?
So now, at the end of the year, have they made any payment? Any part payment of the 600,000 that
No,
they
sir.
owed?
No, sir.
No. So the payables, we are going to calculate exchange difference on the year-end balance. Did you get it?
Yes, please.
Year-end balance. So the translated value. What will be the translated value?
600 28 over
2.1.
Over 2.
What is the rate at the end of the year?
Say 2.
2.1 or 2.
Okay, then I'm cooking.
So it
So
should
the
be
year
2.
ends at
The year ends
September.
at
30th
30th September 2015.
Yeah. 2.0.
So why is somebody giving us 2.1? It's 2.0. So how much are we getting?
300,000.
Something that if we had paid at the transaction date, would have paid 200 and what? 40,000.
40,000.
It's a loss, is that not it?
Yes, sir.
You have a liability and it's increasing, it's a loss. So P&L, exchange loss. We are done with the question. Please, were you able to get some of the things correct? The exchange loss, did you get it correct?
Yes.
Did you get the exchange loss correct?
Yes, please.
Okay, what about the asset issues?
Yes.
But asset was straightforward. If it's the depreciation that maybe you didn't count the month, well, fine. But the total cost, you should get it correct. Okay, just pay attention to details, okay? During the exam. Okay, so the name is what's the name? Onetouch, right?
Onetouch.
So statement. Or comprehensive income. For the year ended when?
30th September.
30th September 2015.
20 what?
15.
Okay. So profit or loss? It is well. Very fine.
Amen.
It's not about shouting amen, it's about that day. Net exchange what? Loss. 60,000. So next I can leave it like that. Ideally, loss, you put it in brackets if you want to. Once you put it in brackets, then remember the depreciation to is an expense. Is that not it? Remember the depreciation to is an expense. So that one too, you put it in brackets. You cannot put one in bracket and leave the rest. I know somebody will say it's in dollars. I should change it per fine. Then the financial position. So now you should be eager. Looking for the past question, let's sequence those things. Questions on what? IAS 21. Check and see if you can solve. If you can solve.
No. Yes, boss.
Statement of financial position. So please, those who said they were struggling with the registration for the full class, kindly WhatsApp me or send a message on the same platform. The administrators will pick it up. They will just register for you and then give you your details to log in. Once you register early, you will get access to videos, then you start watching videos according to the syllabus, then you start watching. Okay. Statement of financial position. Assets. Madam Tina.
Yes, sir. Good evening.
Hey, you dey? We know say you
I
dey.
did.
You
I
dey like
did.
you know dey.
I did like I know this. Please, so per IAS 21, do you apply the same principle when it comes to the hedging? Under that money market and
I'm not getting you out of a network. You are asking, do you apply the same principle when it comes to hedging? No, hedge accounting is purely financial instruments. When it comes to hedge accounting, you are supposed to know whether it is a cash flow hedge or a fair value hedge. They will look at the treatment. It's purely different from IAS 21. That is if I got your question right. Your network, you couldn't complete the question. So
yes, that was it.
okay.
That was it.
All right. Non-current assets, so we have property, plants, and equipment. That will give us how much?
Who says 500?
Who says 500? Then an equity. An equity, we don't have any revaluation thing, eh?
No.
Yes.
Okay, we have some non-current liability to treat, right? The
Yes, sir.
payables. The translated value, 300,000, right? This
Yes, sir.
question came to chartered diploma in IFRS. I don't recall the marks, but maybe it will be by 8 marks, 7 marks, or 10. I see the maximum you can get from this question is 7. So let's take some pictures. Almost half of the class have gone to sleep.
So their
Can I move,
batteries are dying.
can I move to the
Hello,
next
sir.
page? We have closed. So can I move to the next page?
Hello, sir.
Yes, please.
Yes.
Please, the cost of modification, you didn't treat that one in the statement of financial position.
See now, we added it to the purchase cost to get 270,000. You get it?
You have been added to the purchase cost.
Yes. Okay.
You don't
Yeah.
need to
Yes.
it anywhere.
Yeah.
Please,
Yeah.
the picture, are we taking the first one? We are moving. Can I move?
Yes, please. Let's move.
Okay. Please update the PDF for us so that everything will be together. So at least, friends, we are done with IAS 21 and IPSAS 4. Those who thought that we cannot finish, here we. So in the
Sir.
next 2 meetings, we'll be dealing with borrowing cost. Yes. And someone was calling. Prospado.
Yes, sir.
Mm.
About the hello, sir.
Yeah, I'm listening, please.
Yeah, I wanted to ask a question about the public sector. This same standard applies to the PSC. So
Yeah, IPSAS
I
4.
recommend next time. Yeah, when you're next time when setting the question, you do the government sector so that we know how to treat that one over there.
No, it's the same. It's
How
like
to treat.
government can take a
See,
loan.
mostly the questions were on private sectors.
Yeah, I'm saying that it's because it's the same. If I say Onetouch has borrowed money, you can see it as government has borrowed money. If I say that Onetouch has bought machine on credit, you can see it as government who has bought machine on credit. How you get me? It's virtually the same, but maybe I'll look at it. It's just the name that I'll change, that's all. So please, tomorrow you have the document for the borrowing cost so that you print it. Borrowing cost, I'll give you either 2 meetings or 3, is it 2? Yeah. So 2 days you should be able to finish. Friday and then Saturday we'll finish. We look at the utilization issues. We look at specific borrowing. We look at existing borrowing. And we look at where the project is financed from both specific and existing. A lot. We need to solve a lot of questions on the borrowing cost. If we did not tackle the standard, we didn't tackle. But we are doing it in such a way that once we pick a particular standard, you will be on top of that standard. If there should be a question on that standard, you should surely get more than half or score all the marks in that standard. Understand? That is always my principle. If standard 91 to 5, but once it drops, students should be able to get more than half. Get something. The PSA students.
Hello, sir. Tomorrow are we meeting?
No, Thursday is not part.
Okay.
Yes, it's Friday. So we are meeting Friday, Saturday, Sunday. Please, the PSA group, I beg you, take advantage. There's a diary you are supposed to buy. We call it the PSA diary. It's only 70 cedis. Kindly buy, and then I can guide you on how to go about it. I'll use some 30 minutes along the line in the class to guide you, or 20, 15, 10 minutes. so that by the time we reopen school, you would have covered the theoretical aspect of the syllabus. It's questions, specific questions and answers. You would have covered them. I beg you. Because when we reopen, you still buy. So that within these 3 weeks, you can use it to learn a lot. Take advantage. Okay. Especially those who are not waiting for any results. Those who are not coming to register. All right. Shall we pray?
What happened to the theory this year?
Oh, theory came. Oh, what theory were you expecting? Maybe I will arrange the theory that came from that place. Theory came.
Okay.
I know you were expecting it from certain
Thank God.
areas. We are praying. Okay, Gloria,
Yes, hello,
your
sir.
hand is up. I'm calling those whose arms are up. So, Madam Gloria.
Yes, sir. Please, I'm asking, when will the class start?
The main class will start on the 5th of April.
Okay.
And
Sure,
ours
thank
is ending on the 3rd.
Okay.
The next person is
Hello.
Albert. Please raise your hand. I'll call you. Albert.
Yeah, I wanted to find out, will you create another WhatsApp group for those of us who have not been unable to join the main one? Because
Yeah, so I've sent a Telegram link. I've sent a
Oh,
Telegram link, so you can WhatsApp. I'll send it to you. Or better, tomorrow morning I'll send it to all the groups. I'll send a Telegram link to all the groups again.
okay, sure. Noted, sir. Thank you.
You know that there is a 1,000, but look at the number that even joined the class. Okay, that's it, by the way. I know they will come. Emmanuel Poku.
Please, I wanted to ask that would you do corporate reporting?
Are we going to do corporate reporting?
Yes, please.
The corporate reporting and financial reporting, all the standard we are doing are in it. So the
Okay.
IFRS is for corporate and FR. That's what we are doing now. And the full
Okay.
class will come and do the full lectures. That is from 5th April. Or whatever I'm doing here, I won't repeat it in the full lectures. They will just have the video to watch. But this is free, and I expected everyone to join. The
Okay,
standards
so
is
from
plenty. The standards are plenty.
so from when we start proper, you delve into the console and those things,
Yeah, the
right?
reason values and those things, yeah.
Okay. And then please, can you also give out the syllables before time? The standards that you'll be treating, so that we
Oh yes,
can.
they are on the timetable with dates.
On the timetable.
Yeah,
Okay.
I can
Yeah,
reset the timetable on the page.
Okay, I just joined, so I'm not
Yeah,
familiar with
I can reach. So you are on which page? On the Telegram or on the WhatsApp?
I'm on both. I joined the
Okay.
WhatsApp and also
So
used the link.
I'll please. I'm going to resend them there.
Okay, sir.
All right.
Thank
So
you.
please by tomorrow morning you get the video for this lectures on the page. Thank you so much. Thank you so much for coming. Like I said, if you want to register for the full
Thank you,
class
sir.
and you have an issue, you can WhatsApp my line or just put it on the WhatsApp page. The administrators will come and attend to you. Thank you so much for coming. Thank you for the
sir.
confidence.
Hello, sir.
Thank you.
Yes, sir.
Hello, sir.
Yes, sir.
Hello, sir. Please,
Yes,
your
sir.
quotation in respect of you've quoted some biblical statement over there. It seems it's not well structured. If you can check it a bit.
Okay, I will check.
Okay. Thank you.
Okay. Okay, we are praying. Heavenly Father, we thank you so much. We pray that the little we have learned today bless it for us, so that day we can be able to reproduce and pass away them. In Jesus' name, I will pray. Thank you. Amen.
Amen. Sir, please, last question.
Okay.
After prayers,
Please,
no last.
are you in Accra or Kumasi?